Bitcoin stalls at the 200-day moving average, despite strong accumulation from both retail and whales. ETH and Solana outperform, and implied volatility stabilizes as long-term call buyers step in. All this and more in this week's Crypto Insight. Okay, so crypto this week. So we had a little breakout. We tried to break. We then failed. We broke this key sort of level, obviously 45.5. We then touched up to the 200-day moving average and failed there. And we're now kind of chopping and doing our little consolidation as we love to do in Bitcoin. Now, if we were to break above that 200-day at 48 and a bit, I could probably see an acceleration towards the 52 area, which I think is the big resistance area, right? Where we topped out back in December, around Christmas time. Now on the downside, the support that really kind of needs to hold is this 45K area, which if broken, then obviously the next stop is probably that 42 area again, which is really, well, maybe 41 to 42 as we get a bit of a confluence of supports down there, right? So that's kind of where the setup lies right now, but we're kind of in the middle of it, right? In no man's land. Now, if I then look at the sort of price action that we've had since the lows in January, right? If that move down, that longer move down from sort of November down to January was like a final leg of a consolidation, you would have expected this rally over the next 2 months to be more impulsive. And that looks anything but impulsive, right? So from an Elliot perspective, right, this looks very corrective. So if this is a corrective move, then it's likely it's going to get exhausted somewhere in this vicinity of 52, which will be the completion of some kind of fourth wave correction, which will look like an A, B, C type thing, okay, right? And that will then the sell-off, the impulse lower to complete whatever the larger degree move down is, that will then resume. So I could see a situation where we do kind of add the last pop to 52 in risk assets being relatively okay for the next few weeks. And then that's your last level to sell. And then we end up kind of going back towards the lows, if not lower, right? 30K, wherever we're going to get to finally complete that last sequence of the down move, right? I can see that from an Elliot perspective, that's kind of lining up quite well, I think. Okay. And then in general, headlines have been pretty light this week for Bitcoin. The general recession calls on the back of the US yield curve inversion obviously will keep investors cautious from taking risk. But so far, crypto benefiting a little bit from that kind of retail impulse of buying that we've seen across risk assets, right? So that's kind of keeping things okay. And we'll talk a bit more about that when we talk about on-chain stuff. If we then have a look at Ethereum, so Ethereum spot price, obviously doing a little better than Bitcoin, right? It's popped its head above its 200-day, hasn't really retested that level that it broke at 33, and it's kind of working its way towards this key area at around 3,800, 3,900. Okay, that's what it looks to be doing. You've got this kind of break of obviously I've been flagging this as my main sort of one of my top trades, this relative value trade. That's worked pretty well. We've gone from kind of 0.07 to 0.075. So that's about 7% outperformance of Ethereum over Bitcoin since we flagged it. I think it's got legs to do maybe another 5% where it gets to this level, but it's probably going to meet some resistance there, if not a little bit sooner. So maybe that's starting to get a little bit long in the tooth, that trade. Okay. And even today, it's kind of pulling back a little bit. I haven't taken profit on that trade yet. Obviously, I've been running the call switches, but if I do, I'll let you know. I've got that trade on to end of April expiry. By middle of April, I probably would have done something with it, right? If I still like it, I would have rolled it. If I think the move's kind of done, I'll be taking profit on that. Yeah. The only other thing which might give Ethereum a bit of a tailwind is if you look at the emissions and the net issuance and stuff like that, the burning of tokens. Whilst you had issuance actually increase because less tokens were being burned because we had lower fees and lower volumes going on. between January and March, we are now starting to see that tail off and issuance dropping back down again a little bit, right? Which is generally quite positive for price, right? So that might give a bit of a tailwind to Ethereum. If we look at some of the other coins, Solana's just been roaring higher, right? So, you know, you guys obviously know, we've been talking about it on Discord. Solana was up about 40% in a matter of sort of 10 days. Over the last week, it's kind of outperformed all the others by a good, you know, 15 to 20%. It's stalled a bit now, finally, after touching like 142, which was a bit of a level. It just blasted through a few levels, right? Like I think 120, 130, 142 were the levels I had. It just kind of went straight to 142 in a straight line. I obviously had some call ladders on there, which looked a bit spicy on that rally. But thankfully, because the vol was just so elevated, it hasn't really done me too much damage. Now on the pullback yesterday, I took advantage of that when we went sub 130 again. And I basically nibbled on some 150 calls against my call ladder to just reduce the Greeks and just give me a little bit of protection if we start to go again, right? Because I'm bullish Ethereum, you know, it's one of those things. If Ethereum does go at 3,800, Solana's going a lot higher, right? So I just need to be cognizant of that and aware of that, right? So I was happy to spend a tiny little bit more because we're in the sweet spot anyway on my Solana stuff, and I'm in the theta zone and I'm earning up here. I'm happy to pay a little bit of that theta away to protect myself, right? So that's how I've kind of managed it. Yeah, so that's basically the alts. And the reason Solana was so bullish is because of the integration with OpenSea, right? So they basically, that's been kind of been rolling out. I think it's rolling out today. So there may be a bit of a sell the fact on it. We'll see. But that's been apparently the reason why it's been so buoyant recently, right? And it had been in the doldrums, right? It had been underperforming a lot of the other layer ones for a while, and so a catch up was due. But my God, when it wants to catch up, it really knows how to go, right? Okay, so that's what I'm seeing there. Then if we move to the on-chain stuff, so on-chain this week, so we kind of saw Glassnode guys kind of dissecting, you know, where the accumulation is taking place. So they've got these accumulation metrics that kind of show, you know, who's buying and who's like really going for it in terms of like building their stack. And they've kind of split it into different cohorts. And basically, they've identified them as the people who've got less than 1 Bitcoin have been buying a lot. So that's effectively retail size. Okay. The retail size has been a big buyer. They call them the shrimps, right? And then you've got the whales who are in the 1K to 10K in terms of how much they're holding. Okay. So that's the likes of, you know, the Luna Foundation, right? Would be considered a whale, right? Maybe MicroStrategy, same sort of thing. So these are the guys who have particularly been accumulating, right? That's like one of the takeaways from Glassnode this week. So it's a mix, right? It's the big boys and the little guys. Now we know the little guys in general are buying meme stocks again and stuff like that. So no surprise to see them in there, but you're also seeing some of the big boys buying as well, which has been supportive, obviously, to price. We saw a big spike in volume being withdrawn from exchanges. So that's the top right chart where it spikes down in the red, right? So again, just confirming more hodling behaviors going on. And we've seen that quite consistently over the last, you know, year or two, right? Relative to, you know, before that, there was lots of stuff on exchanges, but that's been coming off, right? That we know that, right? The less liquid supply has been growing and people have just been happy to just park their coins off exchange. Yeah. You then see the bottom right. This is kind of showing you what Luna's actually been up to. Obviously, they bought some in Jan. They didn't do much for a while. And in 9 days, they've kind of tripled their holding, right? So they now own like $1.4 billion. They were talking about getting up to 3 billion and maybe even 10 billion at some point in the future, right? So they've still got some room to go, but they really stepped up their buying recently, okay? But they, over the last few days, they kind of held steady at kind of 1.4 billion. And then other things we're seeing, Canadian ETF inflows, that's supportive. Been seeing that. We've been seeing wrapped Bitcoin balances at the highs. That's this chart on the bottom right. So what is wrapped Bitcoin? That is basically tokenized Bitcoin that sits on Ethereum, right? And is used as collateral within DeFi, right? So there's some of that cross-chain stuff going on, but that's basically at the highs, right? So Bitcoin being used as collateral, as kind of your most pristine form of collateral on DeFi products, basically, right? Which in general, again, is supportive because if DeFi grows, and that type of stuff grows, then that brings a bid to Bitcoin with it, basically. Yeah. So that's what I'm seeing on chain this week. Now let's move over to vol. So we've got this chart here is talking about realized vol, these charts here, right? So we've seen realized vol, despite the break, we didn't really get a follow through in vol, right? So we popped, you see that spike in like 1 week implied on the 1st of April. Realized vol has had an uptick, but not really anything that meaningful, right? And it didn't follow through. So, and then the implied vols came back as well in the short end, right? So you can see here, you've got an implied realized vol spread of 10 to 15 vols in Bitcoin, even though realized vol is on its knees. So you've got realized vol here on the vol cone, sitting here, hugging near the lows in the 40s, yet you've still got one of the wider implied realized gaps, okay? So that front end kind of, you know, holding in the mid 50s, whereas realize is down there at the kind of lows, right? So the market basically saying we don't expect realize to stay down there for very long, right? If you look at Ethereum, that spread's not as wide, right? So you've had implieds come in, obviously because of all the selling that's been out there, but you know they're holding it around 60 odd in the 1 week, but then the realize has been a little bit higher in Ethereum, right? Ethereum's had a bit more outperformance to the upside, and so the implied realized gap hasn't been as big. Yeah. But essentially what that's saying is there's less value in selling Ethereum gamma than there is in selling Bitcoin gamma right now. If you want to earn premium out of crypto options, you probably prefer to do it in Bitcoin than in Ethereum, given those metrics at the moment. And Ethereum realized very much hugging the lows as well, suggesting, yeah, if vol is mean reverting, then you know you probably don't want to be caught too short Ethereum gamma right now. Yeah. Okay, so that's kind of what I'm seeing on realized side of things. If we then look over at the kind of term structure and what's going on there, obviously contango, right? So interestingly, longer dated vols seem to have found a bit of a level, right? So we can see that via this term structure curve, where week on week, anything June and longer hasn't really dropped, whereas the front has continued to come down, and the front is anchored to realize to some extent, basically, right? So whilst we still got an implied realized gap, the lower realized goes, it's going to drag implieds in the front end with it to some extent. And we've got more supply of that stuff as well through the DOVs. So it makes sense, right? So you've just got a really, really steepening, really steep kind of curve between the front and say June, right? We're looking at like almost 20 vol points. Now the charts on the chart on the right kind of shows you that when we're in this really steep curve, what tends to happen is when the market suddenly looks like it's having a move, the curve just completely flattens, right? And you get this compression of all of these maturity vols where they all cluster up again. And then the minute market stabilizes, they just collapse again back into that contango. So you saw that happen over the last sort of 2 weeks. You saw that happen twice already, where you get the weeklies trading really low, the curve kind of in contango, and then all of a sudden, boom, they all trade the same level, and then the front collapses again. And then they go again, they trade the same level, front collapses. So that's kind of the price action that you're seeing in that term structure and the way it's been moving. And it just shows you that there's not much, you know, it doesn't give you much opportunity to sell that front end, right? The minute we get stabilization, that front end collapses pretty damn fast. And then if you look at Ethereum, it's kind of not as pronounced, I would say, basically, right? You're not quite seeing, you did see a bit of that compression, but I'd say in general, the Ethereum curve is kind of holding steeper, right? On average, more. And I think that's partly because, you know, people, it's steeper to start with. And then, you know, that Ethereum front end just keeps getting whacked out, right? Because all of the DOVs out there, if they're basically anything other than Bitcoin, Ethereum's probably the one that's being used to hedge out that DOV flow. So that's providing quite a lot of supply of that Ethereum front end, right? So that's what I'm seeing in terms of implied and term structure. If we then look at skew, so skew, whilst we got a bit of normalization of skew across the curve last week, I'd flagged that, right? It was kind of, you know, put skew was kind of for sale, and we were a bit more neutral across maturities. We've kind of now steepened back out again. So whilst you've got kind of cool skew, well, whilst you've got neutral skew in the long end, like in the 6 month part of the curve, you can see anything 3 months and shorter is now pushing back towards the put side of things. Okay. Now, is that a bearish indicator? Well, what do we think is driving that? Well, it could be a number of things. It could be because people are getting more cautious, okay, because the breakout didn't happen. We might be seeing that. Or it could be the opposite, and it could be that people are adding risk in crypto and they're buying protection with it, basically, right? They're buying relatively shorter dated protection with it to buy it safely, basically, right? That might be another. So that's the thing, like, you know, and I've seen this in equities over the years, right? Like often it's when people are invested that put protection needs to be bought, and you see a bid coming through on puts. Okay, people don't own the stuff; they don't need to buy puts, right? So, you know, whilst puts can go extreme when people are shitting themselves, puts can also catch a bit of a bid when people are relatively constructive, right? Because they're happy to increase their stake, increase their holdings, but because they're professionals and they want to manage their risk, they might be doing risk reversals around it, and they might be buying it safely, basically, right? And that kind of makes sense. Yeah. So that's what we're seeing there. And if you look at the relative value of skew, it's kind of in line, right? Whereas before you had Ethereum really driving that bid to skew, I think it's a bit more equal now, whereas the skew is quite the same, whether we're looking at Ethereum or Bitcoin. It's pretty similar based on whichever maturity you choose. Yeah. So that is skew. And then the last charts, obviously, last but not least, we'll look at what flows have been going on. I wouldn't say there've been massive flows this week, really, but a few things to highlight. So if we look at Bitcoin, definitely a skew to the call side still, which lines up with the accumulation that we're seeing in the on-chain stuff and general slightly more constructive sentiment. But if you look at what's gone on in terms of the options, the big blocks, we had a big closeout of some April 60,000 calls where the open interest dropped by like 30% or something. And then you had the back end call buying come in, right? So you've got these orange and blue blocks, which are clips of December 22 and March 23 call options in the strike range of 70K, 80K. So that's a longer term way to get exposure, fixed premium spend. If we do start to charge, those things won't decay too badly and will make some money. Okay. And now, because those longer term vols have been coming in, you're not paying the earth for those long term options, basically. Right. So not a bad way to kind of get some exposure on in a limited risk way. So that's Bitcoin flows. If we now look over to Ethereum flows, what we're seeing there, a little bit more mixed. You can see less of a call skew, kind of a bit more of a balance between calls and puts. We're seeing this big April protection up here. It's not clear to me whether that's a buy or a sell. There's a bit of a suspicion there that might actually be a sell that's being used to fund some upside, but it's not as obvious, I would say. But just a decent clip going up in those April 25 put area. Obviously, the bright greens are the DOV hedging impact. So that's coming in at like maturities that are, sorry, not maturities, this Friday expiry in the 3,400, 3,700 strangle effectively on Ethereum, where that big clip of that green is a hedge, most likely, to those DOV flows. And then lastly, we're seeing long-term call buying as well on Ethereum, December, March, September, you know, all that stuff going up in the region of 5,000 up to 10,000 strike, basically, right? So that's what people are using right now to get their long-term bullish structural bets on, and they're staying the hell away from anything June or shorter, it seems. Yeah. Okay, and that's it this week for crypto. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.